All right. Hey, good morning, everyone. Welcome, and thank you for taking the time to join. I know it's busy, but I always do appreciate it when you guys dial in live. If you have any questions, use the chat function in the GoToMeeting app and type it. We'll try to get it read and answered. Let's just jump right into it because the markets are pretty volatile here overnight. You know, uh, when I went to bed about 11 last night, everything was down pretty good. And when I woke up to come in here, there was a big pop about 3 a.m. And so you start reading, and what was it? My gosh, something drastic must have happened. And overnight, what got the market going is chatter out of Russia that Putin and his I don't know if you what you call them, his senators, his oligarchs, his people are making comments all that the grain corridor is no longer necessary and that they're going to close it. Um, and they're that's on the heels of Russia turning off the gas line feeding Europe. So they've taken a more aggressive posture and a little bit more hostile posture to everybody in the world. And then you've got the continuing backdrop of all of the recessionary fears that's going to happen. When Putin turned the gas off, the energy markets in Europe went so ballistic. The margin calls yesterday morning were over $1.6 trillion for the energy companies. So, right, what they were doing was selling natural gas to the consumer and then selling the futures market to hedge themselves, and it just exploded on them and buried them. So, those companies are insolvent and are going to have to be bailed out by Europe. What does all that have to do with grain? Well, nothing really, except for diesel distribution. If you can't move it, it doesn't count. Kind of talk. So that got wheat going a little bit this morning. But what's interesting about wheat is that we've been in this long consolidation period since the middle of July, or since the beginning of July, and we're literally at the same values now that we were then. Okay, so even though wheat goes up a dollar, down a dollar, we have gone nowhere at all in this long consolidation pattern. Now, whenever a big consolidation pattern works itself into the marketplace like this, you know that a breakout is coming, and the major question is are we coming out higher or lower? Well, Chicago wheat has already come out higher. We've already taken this high out. Minneapolis is weaker, and Kansas City is caught in the middle. Okay, we think we favor higher prices, and we favor that for a couple of reasons. One, we think that the Russian situation is much worse than our media outlets are making it seem. I don't think Putin gives any cares whatsoever about being viewed as a humanitarian and being a good guy. I think that ship sailed when he started murdering tens of thousands of civilians all over the Ukraine. So any narrative that thinks that he cares about anybody is, except for Russia itself, is I think just kind of whistling Dixie. So I think that that's going to continue to get worse, and this is happening against a backdrop of the tightest domestic wheat crop that we've had in the last decade. So our domestic ending stocks are lower today than they were at any point since 2012, and our drought is as bad as it's ever been. So the question is, will we plant the acreage, and will we grow a crop? The reason people think that we're going to plant a lot of acreage is because the input costs for corn are so high. So we're thinking that we may rotate some acres away from corn and into wheat. But the reality is that that's kind of an easy decision for you guys to make, because if you plant your wheat, now you've got a good cover crop, and you've got until March to make a decision as to whether you want to plant it or kill it and come back in with something different, right? Like corn. So we think that wheat's got to go buy acres. We think that this move is the beginning of something that will pop on up higher. Is it possible that today we have a fake breakout? Yep, absolutely, because it is just rumors. There's been nothing actually happen yet in the Ukraine. It's not like they've started blowing up boats and blocking everything else. It hadn't happened yet, but just the fear of it popped wheat 30 cents this morning, just out of insecurity. And if this market does break these highs here, which would be 921, and this high is 921.5. So you got 921 is a big number to watch. If that happens, then I would expect wheat to catch a bid and move on up. Also notice that we've now traded ourselves back into the bottom side of our cloud, which once you trade back into it, you take this high out, everything will start to turn north, and there's a chance that we'll see this leading edge become more bullish than bearish. So let's talk about what clouds mean here for a minute, because we're going to spend a little bit of time in them. Remember, this indicator plots this line 26 days ahead. So the cloud that you're seeing here was plotted 26 days ago, okay? And it's a reflection of a 56 period moving average and the midpoint of these two lines here, okay? So it's giving you a forecast of where support and resistance would be over a 9, 26, and 52 period moving averages, which is very powerful, and kind of how those averages work together, and the space between the two is the cloud. So it's forecasting. So 26 days ago, it forecasted this area here as a choppy area or a difficult area in order to move or in order to get through. On the leading edge, what's important about it is the slope and which line is on top. And what you're seeing here is this slope start to tail off. And if the price moves up, then this will ultimately cross back to the bullish side, which can be a catalyst in and of itself. So the first thing you got to do to break a downtrend is start to get inside the cloud, and then you got to work your way through it. So I don't think we're going to go straight up, but I think we could chop sideways here, and then as you get closer to the top, that's when you get your acceleration, okay? So we're turning a little bit more bullish wheat. We're not super bearish wheat at all. Let's talk about your crop. If you've got wheat in storage, rather than pay storage, a nice option here is to sell your cash and collect the money, sell an $8 call and buy a $10 or $8 put and buy a $10 call. You can do that for not very much money, and it would open your upside up above 10 bucks if we did get a push higher without exposing you to much, if any, financial risk to the downside. All right, that's what we're going to talk about on wheat, because I do think that wheat is really important to corn, right? Because if wheat catches a bid because of insecurity, corn's got to do the same thing. And here we have corn. We've been nervous about corn ever since we broke back up into this area. In fact, we started selling and recommended everybody get 50% sold on their corn crop right in here. And the reason we did that is because of this low right here and the wave counts. Even though we've come up and out of our cloud and we've developed a bullish leading edge, a bullish Kumo over here, we don't really love the slope of this cloud, and we haven't liked that we haven't been able to get up above this low here. Well, all that's changed here this morning so far, and if corn can continue a little bit of strength and get up above here, then this bearish count we've been fearful of has to disappear, and it should open up a move to the 706 area. And anytime a grain can pass a round number like $7, if it can break it, you have to assume that it's going to pop on up higher. So I don't know what the catalyst would be for corn. I don't know if it's exports. I don't know if it's the USDA, dropping its yield too much. Or dropping its yield down to that 170, 71 area. I don't think they'll do that, but they could. So I don't know what the catalyst will be here to push corn higher, but the technicals on a close, let's give it some room and say a close above 688, which would be all three of these lows right in here, would start to argue for higher prices. Now, look here, it says also the 61.8% retracement of this move to the downside, okay? So even though we're starting to lean a little bit more bullish, I can't rule out that we're going to trade up to this 688 level and then roll over and die, okay? Corn is vulnerable in this spot because of the technicals and because of our demand situation. So that's why we went ahead and sold it, because for the last 2 years, the downside's been pretty limited. But in this setup, in this count, you know, the downside can actually count all the way down to about 480 on corn if it were to roll over, which is why we wanted to get sold. We don't think that's going to happen, and we don't think this is a technical sale. We just see the downside and want to make sure that your risk is managed adequately, and that we're not just putting our heads in the sand and assuming we're going to keep going higher, because there is enough catalyst here to warrant lower prices. Now, one of the things driving that is the currency market, right? Which is the dollar. This morning, the dollar is trading at 110.67, which is about as high as it's been anytime in the last 30 years. So a higher dollar makes it more difficult for other countries to buy our products, including our food, which is generally bearish for food prices. We've seen this rally in the face of a dollar rally. So that tells me that the market really perceives a much smaller crop than it thinks it than maybe is out there, and that the true relative value of corn is probably up here north of this prior high. So if you start to see weakness in the dollar, or confirmation that the crop is low or tighter than we think, then you could see the grains just ignore currencies altogether and move on higher, even in the face of what would normally be a really bearish fundamental driver. So critical point for corn. I think it's I think it's holding up well. I really kind of expect to see wheat and corn both pop up above these levels, but if they reverse here, it's not going to surprise us either. And if we do reverse, we need to watch the 650 level really close, because if that gives way, then I think we're headed much lower on corn. All right, now let's talk about soybeans, because if anything, soybeans have been really resilient. Let's go through the fundamental backdrop on beans. The bullish story from the weather and crop size on corn does not apply to beans. The growing the critical point of the growing season is just enough different between the two that beans got the best of the growing season while corn got the worst. And so that has our crop size at an all-time record of 51.9 according to the USDA. FC Stone is at 51.7. There are some that are over 52, even 53 on the bean crop. Now the current forecast has a lot of heat and a lot of dryness, so that some traders think that could shrink it. And now, so you're dealing with a massive crop here. Then we expect Brazil to plant, in South America, to plant rainforest to rainforest and really plant a lot of soybeans. In fact, we're expecting them to have a crop that's 1 billion bushels larger than it was a year ago. So that's bearish factor number 2, right? Brazilian supply, our supply is huge. South America's supply is massive. And then you start talking about exports and our dollar, and the fact that Argentina is actually creating financial incentives for growers to push more beans out into the export market. That's bearish for us. And China continuously locking down and saying, hey, we just can't fight this COVID thing, which I think is really more tied to their drought and their energy problems and some other issues. But that's not really relevant to us. The point is that if they don't buy soybeans, then you have a trifecta. You have a massive crop here, an increase in supply, you have an increase in supply in South America, and you have decreasing demand. That would push soybeans radically lower. But the trade has been thinking about this and digesting it now for 60 days, because none of those 3 things are a shock to us, right? And yet here we are, sitting right on our 200-day moving average, and today showing a false breakout to the downside. So we recommended everybody get sold soybeans right in here, okay, at about 14.30, 14.50. And I think that's still the prudent move to make. But beans are being way more resilient on this downside break than maybe they should have been. And if we break back above yesterday's high, then I think you got to turn back and look higher for a challenge to the top end of this range, all the way back up at 14.89. It makes no sense fundamentally that they would do that, but it doesn't have to, right? It's a futures market, and beans could be finding some things out that we don't yet know about. Maybe that's because our crop size is too small. Maybe because China's going to come in and buy them all. I don't know what the driver would be, but beans price action here this morning is resilient and interesting to say the least. Okay, I think that's covered everything that I really want to cover. I still like being hedged on beans here. There's a lot of reason to be worried about the downside in beans, and especially these counts, right? If this count comes to fruition and we break all these lows, then you're looking at $12, $11.50. You're looking at a really sizable break. And right now, we don't see the fundamental catalyst that would drive it much, much higher. If corn pops and goes higher and wheat goes, then I guess the beans will probably go with it. But unless the fundamentals start to shift, then that's going to end poorly for beans too. So lots to pay attention to. When markets start to consolidate and get really choppy, that's when you've really got to laser in and pay attention, because the next move is coming and the breakout will happen eventually. So I think we favor up in wheat, we favor up in corn. That puts us more neutral beans, unless we roll over and take back out this morning's low. Then I think beans are going to have a really, really tough sled. Okay, that's 17 minutes. I know we talked fast and went through a lot of information. If you have any questions or want to talk through any positions, please call us and let us know. I think more so in the last today than in the last 2 years, it's important to be managed here and not just long the bin, long the field, and along the board. I think we really need to be hedged and careful in this particular setup. So if we go up, great. If we don't, we'll be prepared. I hope you guys have a terrific week. There is risk trading futures and options, and you should only do so in light of your own financial condition. I hope you have a terrific day. We'll talk to you next Wednesday.